I can tell you whether you're unreporting your income or not. So if I go out to your house, I look at your house, I say, gee, this house is worth X amount of dollars, but yet your tax return does not substantiate that. I'm going to think, something's wrong with this tax return. So what IRS does.
Hi there. My name is Josh Grubskowski with Best Start for How to Stay Out of Trouble. If you're worried the IRS might come after you, let me tell you, this is the video that you can't afford to miss. Because today, I'm here with foreign IRS revenue agent who's really going to tell you exactly how things look from the other side of the fence and how to stay off their radar. And stay tuned, because during this video, you're going to find out some really good tips on how to keep yourself clean and how to stay ahead of the game where the IRS is concerned, especially when they come knocking. So there's more strategy than most people realize involved in putting things together. So let's just jump in, Mike. What's one of the biggest misconceptions that people have about how the IRS actually finds audit targets?
Yeah, if we're talking about audits today, AI is going to play a huge role in what's happening. One of the things they're going to start doing is auditors are going to be asking for all your bank accounts for an audit, which is a game changer because they're going to be introducing those into their computer system. So when AI takes a look at all your bank statements, they're actually going to be able to put together audit strategies really for IRS, because they're going to see how much money was really deposited. They're going to see where that money has gone. So they're going to start alerting and throwing up red flags. So AI is going to just, it's a potential nightmare for taxpayers. In the past, IRS ran algorithms to find out what audit targets were. Basically, you were in competition with your neighbor. Most people don't know that because algorithms were usually based on your AGI, kind of where you lived, your zip code. So if you fell in the norm with everybody else, say you made 100,000 and say all the deductions and dependents were all, within a 20% margin. Once you started going at 25 and 30%, different flags would pop up. So the higher score, the more likely that IRS would go ahead and nail you. So you were in competition with your neighbors. You just never knew that.
So what you're saying, I guess, is that these audit triggers aren't as mysterious as people might think they are, right?
No, I could look at or you could too. Josh is being humble about this, asking me all the questions. Josh in his own right is excellent. He knows what the hell he's doing. We're partners, so I know the value he certainly brings. He or I could look at a pattern.
Yeah. But what would you say are the top 2 or 3 red flags that all's guaranteed a second look from the IRS? I can't give that.
I wanted to buff you a little. Come on, give me give me an opportunity to let people know, even though you're asking me the question, that both of us could look at a tax return and tell whether that tax return is going to be audited. It all really depends on what your AGI is, and if your tax return was real. You could look at a tax return and know exactly what's out of balance. So usually, we should qualify one thing. Most of IRS's targets are for self-employed people or businesses. People who file the standard W-2, we call them boring tax returns, are 81% of Americans. The other 19% are the people that are self-employed. And those are the people that usually take advantage of the system and throw different things in, advertising, sometime marketing, going out to lunches. You just know by looking at the returns what's out of order.
Well, you've seen a lot from the inside, and I've seen plenty from the other side of the table by doing all these audits. But what happens when somebody consistently underreports, or who has, like what you might see, a pattern of amending returns? How does the IRS interpret that kind of behavior?
It's called fraud, gross.
The F word, and you had to say it.
I had to say the F word. It's not the F word everyone else wants to say, but the fraud word. I'll tell you the biggest thing. If you ask me for the biggest thing, I shied away from it. It's the cost of living. I can look at a tax return. If I go out to your house, I can tell you whether you're unreporting your income or not. So if I go out to your house, I look at your house, I say, gee, this house is worth X amount of dollars, but yet your tax return does not substantiate that. I'm going to think, something's wrong with this tax return. So what IRS does, they do a reverse audit. They do what's called a cost of living analysis, which simply means they add up what that average person would spend on a monthly basis for expenses. And then they would multiply that by 12. So that would have to be what that person shows on the tax return. So that just should make perfect sense. So if I'm looking at your house, it looks like you're living in a $3,000 a month house or rental. IRS uses that maybe 1/3 is going to be the expense on that. Then 70% more is for other things. So IRS backs into your income that way.
If this is hitting a little too close to home, or you're feeling like you're in a little hot water, just reach out to us at Best Tax Pro. Click on the link, schedule a consultation, and we'll see if we can help you give a little clarity.
Josh, can I add one more thing before you go? Here is very simple. I'm just telling you, for everyone listening, Josh could probably look at your tax return most of the time and tell you if it needs changing or buffing up a little. Correct, Josh?
I've been doing this for the last 22 years. Tax returns are my specialty. The reason why I reached out to you today, Mike, is because most people aren't aware of what it's like to talk to somebody who used to work for the IRS, and the value that you bring to a conversation like this about how the IRS perceives certain activities or behaviors, and just to give people more of a heads up on how the IRS might perceive it. But yeah, I've been doing taxes for the last 22 years. I did about an audit a week for about 8 years for people who did TurboTax returns, 36 to 40 off a year. You get an idea of that. I've got a few collections cases underneath my belt working with you over the last 5.5 years. And then U.S. tax court cases are a place where I shine. I never lost at a case where the IRS won. My clients always prevail in a positive way. And so I'm very selective about the cases that come through. But yeah, it's a great profession to be in, as long as I'm enjoying helping people. And, with the IRS, it's easy to make people happy because the IRS isn't their friend all the time. All right. So I've seen some cases where people will lose their right to an appeal by playing the clock in the wrong way. Can you give an idea of when the best time to act when working with the IRS is?
When the best time to what? I'm sorry, I didn't get that word.
Act. Like if the IRS is on your case or you start getting letters from the IRS, when's the best time to take matters into your own hands, or to contact a professional and get professional advice on what to do next?
Yeah, that's a really good question. I always answer it the same way. If you have a little angst or burning in your heart, and this ain't going to go well, that's the time to give it up and call a professional. When you open that letter and see what they're asking, if you know you can handle it, go for it yourself. Nothing wrong with your confidence. As soon as you get that little sick feeling, don't bother. All you can do is get yourself deeper. Here's the thing that people don't realize is that IRS is not going to look at 1 year. They're going to go back 3 years. All they do when they send you an audit letter, just so you know, they just get their foot in the door. Once they start fighting and digging and pulling apart, they're going to say, hey, we're going to go back 3 years plus. They can go back another 4 years if there's 25% omission of income. Then if they feel there's more fraudulent, they can refer the case to criminal investigation. So there's a wide scope of really what IRS could do.
Yeah. And a little over a month ago, I did a few videos with a guy who's former criminal investigation division, Robert. Let's just talk solutions, because this isn't all about fear. It's about being smart. So What are the top things that a taxpayer can do right now to avoid raising those red flags and getting into trouble with the IRS down the line?
Yeah, that's a really good question, and I am asked that a lot. I'm not trying to say, "Hey, you gotta see Josh, you gotta see a person." If you wanna stay out of trouble, you've gotta talk to someone who can keep you out of trouble. And it's really an obvious answer, but people say, "Well, I'm gonna try this myself." Well, if you think you're doing something even a little nefarious or on the dark side, IRS's new algorithms that are gonna be used by AI, they are going to be dead on. And listen, if you want to stay out of trouble, you got to hire a professional because they know the boundaries in which you're safe with IRS. I think that really, I think of a practitioner, Josh, as putting a nice warm coat on you that you're not going to have a problem with because you're kind of have this little armor on you. Okay. Does that make sense?
It does. It does. And I got to thank you again, Mike, for sharing your time with us and expounding on some of these questions that I think a lot of taxpayers have on their hearts about how to stay out of trouble with the IRS. If you learned something new today, why don't you hit that like and subscribe buttons? And if you've got any tax questions, we've got a link on our website to schedule a free consultation for us to take a look at your situation and see if we can add some value to that. No problem. No harm doing that. Mike, thanks again for your time. Do you have any closing calls?
No, I can't over. If you're a W-2 wage earner, there's nothing wrong with going ahead and using software and stuff. If you're making over 100,000, you'd be crazy to do this on your own. And if you're self-employed, you're crazier to go ahead and prepare your own tax return. It's not only could you get in trouble, there's just some hidden deductions a true professional can bring to light that's actually going to save you money.
Thanks very much again, Mike. Make sure to hit that like, subscribe buttons, and share this with somebody who could really benefit from hearing this stuff. And if you're facing some serious tax problems, again, we look forward to talking to you soon. I hope this has been helpful.